chop, all my young homie. All my young homie, chop, 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 all my young homie. Chop, 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 chop.
What's up, everyone? Michael Mnatskanen here for another live office hours. This one I'm very excited about. This is something that people ask me all of the freaking time, and it ties into kind of one of the biggest questions. When you're starting out in real estate investing, which path should you pursue? Should you focus on active income or passive income? So let's get into that, and then understanding which path should you pursue, why, depending on where you're at, and what are the ways to make money through those routes, right? It's one thing to say, okay, I want to get into real estate investing. Okay, am I doing it for passive income or active income? And then it's, if I'm doing passive income, what does that mean? How do I get there? I'm doing it for active income. Okay, what are the various ways for me to do so? And then I will give you my perspective on why I think certain active income activities are better than others. So as a quick reminder, hey guys, Michael Mnatskanen, real estate investor that has gone from zero real estate to over $22 million of real estate in less than 5 years. The majority of the properties that I buy, I rent them out as the rent by the room or co-living model. I've built my entire portfolio using very little of my own money, primarily through raising money from other investors, right around $5 million collectively to buy and build my portfolio. And I buy most of my deals leveraging creative financing. If you are an existing real estate investor, maybe you have a deal or two, or you have a few deals and you're looking to scale, that's what I help people do in my super investors community. It's helping you get all the advanced skills and knowledge, as well as the roadmap to help you scale to actual financial freedom and building wealth. I don't think it's the right fit for the majority of people, however. It makes the most sense for those, like I said, who are already doing the thing and want to now scale at a higher level. Or if you are newer, but you have certain advantages, you have your active income needs met, you have some capital set aside, you're committed to being like a buy and hold investor, and you just want to fast track your path to do so, I can help you. The majority of people, I think, if you don't have your active income needs met yet, it makes more sense either to focus on that in your current industry, the current job you work in, right, if possible, or do so through real estate, but do so with the end goal very clear. I think a lot of people get into real estate investing and then they waste a lot of time and energy chasing shiny objects. They waste a lot of time and energy following paths that don't make sense for them or are not in alignment with their overall goals. So that's my intention with this video, is to help break that down as much as possible for you. I was just with my mentor, Pace Morby. He invited me and others in Owners Club to go fishing with him. And I had this light bulb moment with someone who is part of tons of mentorships, paid close to $100,000 collectively in various mentorships, education, all this stuff. In a short conversation between us, quickly clarified that her biggest hurdle right now in succeeding in her real estate investing journey, why she's even failing to start necessarily, is because she is focusing on active income the way that it's presented to the majority of people, like active income, go wholesale, go fix and flip, go do these things. But in reality, that's not in alignment with what she really wants out of real estate. So we had a short conversation. She knows she needs to be a buy and hold investor. She was very clear that she doesn't want to put too much unnecessary time and energy into that. So then, okay, well, then be a private money partner and own assets with other people that you feel comfortable in alignment with their investing goals, the properties that they're buying, who they are as operators. Are they proven? Are they doing the thing that you want, the way that you want? Then partner with those people. Once you get to a certain point in your real estate investing journey, you can start seeing kind of the common patterns and provide these types of solutions to people. This is what my mentor did for me when I felt so overwhelmed and lost a couple years ago with, I don't know how to get out of the struggle that I was in at the time, which was kind of doing everything. And he very quickly identified it's because I wasn't focusing my time and energy on all the right things that I should be. So then outsource the stuff that no longer makes sense for me and then focus on the most important parts of my business. And I did that, and I scaled from $2 million to over $22 million of real estate in less than 2.5 years. So at a certain point, then you get to be the one that passes the torch and help other people out with that same knowledge. And that's what today's training is, to help you guys as much as possible, depending on wherever you're at in your investing journey, to get very clear on, does active income make more sense for you, or does passive income make more sense for you? And if you go down those routes, should you focus on like which of the different categories should you focus on and why, right? And there's a lot to that. So let's get into it. Let me throw a quick little banner. All right. Boom. Oh, I spelled that wrong. Whatever. Who cares about all that? All right, guys. Let's just get right into it. I don't really care about the banners and whatever. So if you get value out of this, just please give me a like, share it, comment. That's all I ask for. Just share this with other people you think this would be relevant for. The majority of people who follow me, I'm not the guy who gets a bunch of views. That's not even my intention, is to get a bunch of views. It's to provide people as much value as possible. So if you think this is beneficial to you and could be for someone else, please just do me a favor and share that with someone. If you get value and want to see more of this stuff, subscribe. I appreciate that. So let's talk about the different active income versus passive income avenues in real estate investing, but more importantly, how you should decide which route to go. And this is based on my own experience. This is not a end all be all list. This is not, there's people who are in a certain position where I think they should be focused on passive, but they focus on active and whatever. But this is my take on it. So if you have your financial needs met every single month, so if you spend $5,000 a month and in your job, whatever you're working, you're making more than that amount, you have your active income needs met, right? You can cover all your bills. Maybe you're not saving a ton of money or investing, but you can pay all your bills. I think that is the only time you should consider shifting to passive income, right? To the buy and hold investing primarily. That's the most passive income route, right? Buy and hold investing or lending your money out to people. That's pretty much as passive. That's the closest thing to generating long-term passive income you can in real estate. They still require upfront work, but then they pay long-term dividends. Whereas active income, they still require work upfront, but they give you money upfront. So as a rule of thumb, if you cannot comfortably pay your bills every month, you should be focused on active income. Here's where I detract from some people. I don't think the only source of active income for a lot of people should be exclusively, I need to make that through real estate. You can make that through real estate, but I talk to lots of people who are already making some money or have skills, and they can just invest more time and energy into just getting paid more in the job that they have. So leveraging your skills to then get paid more in the industry that you work in, the place that you've already spent time, money, energy, years accumulating knowledge and experience and, like network and all that. I think that's easier for the majority of people to boost their income through their current employment track than it is to just jump into real estate and hope that solves all their problems. I think, with that being said, if you are on and this is where we're going to separate based on income brackets, and I'm just using this as a rule of thumb, but if you're making less than 80,000, maybe even less a year, then you should start considering real estate active income sources. And I'll tell you why. So if you can't currently make more than 80,000, right? And that's a lot. It's $40 an hour. That's the majority of people in our country make less than the median household income is 75,000 or less, right? So half the country makes less than that, right? So half the households make less than that. I'm saying if you're in the lower half, then real estate might make sense for you as an active income source, because I think for a lot of things, unless you're willing to invest the money or energy and time to then level up your skills to then be able to make more money through a job, I think it's too hard. If you're going to spend time, money, and energy into getting more educated to then make more in a job, that's when it kind of makes a lot of sense. Well, then just do that in the real estate space. Don't do that, don't go to school to get a master's degree to make an extra $30,000 through a job. Do that through real estate. That makes more sense to me. So if you're on the lower, 80,000 or less, that's definitely not low income. But if you're on the 80,000 or less, the lower half of the household income bracket, then real estate is making active income through real estate is more of a clear decision for you, because it's not as easy for you. Like if you're making 100,000 or 150,000 already, or, I talked to someone yesterday, they're making $500,000. I'm like, that's a great active income. Why would you then, if you're making all that active income, why would you potentially give that up to then go and invest time, money, and energy to learn how to wholesale, fix and flip, even bird dogging, one of my favorite active income sources, these other things? Why would you spend the time, money, and energy if you got $100,000 or more coming in to then restart in a new industry that is very hard, and it is very competitive. So if you're going to do it part-time and you're not all in and you're not driven by the need for that active income, you're more than likely going to fail. You're going to burn out. You're going to think real estate's a scam. You're just going to give up on it because you're hoping, in the best case scenario, we'll say, you're taking home $100,000 a year through real estate, through wholesaling, right? Because it's not this linear thing. You don't just, every wholesale deal that you do, let's say on average nets you $10,000 per deal. And let's say you're doing 2 deals a month. Well, that's $240,000 of active income through wholesaling. That's more than the majority of wholesalers are doing. 24 deals a year is, you're already top. You're like, we're already one of the top people in a lot of the investment communities that I'm part of in your ability to wholesale successfully and consistently. That $240,000 is not that at face value. That $240,000 comes with costs, right? So if you're doing the acquisitions, you're finding the deals. Well, someone needs to sell them to end buyers. Well, that's typically a 50-50 split. So your 240,000 really quickly becomes 120,000. Well, you need to get lists, like lists of people to contact based on motivations, skip trace those people so you can get their contact information, reach out to them through your CRM of choice. You get paid for dialers. You pay for maybe VAs to do some of the cold calling, spending all this time and money and energy to make less than $100,000. Well, if you're already doing that in your job, do what I did and leverage that as your superpower to grow your buy and hold business to get you financially free through passive income. But if you are making less than that, you have a very clear case that this might be the strategy for you to pursue, right? So the big thing that I really want to articulate is, if you're not already real estate investing, you're trying to decide, should I focus on active income or passive income? And you got to learn these skills either way. I think it's a somewhat clear financial decision. If you can make $100,000 or more in your job, continue going down that path, leverage that and develop the right skills, finding great deals and analyzing them, raising money for those deals, and then owning and operating your business in your portfolio so you can be financially free through your job instead of trying to reinvent the wheel and reinvent a whole new profession for you that a lot of people do not succeed in through, like, trying to wholesale, or even more so, take some more risk to fix and flip, which has higher reward, but you also have a lot more risk as a fix and flipper than you do as a wholesaler. There's very little risk as a wholesaler, except the time, money, and energy you spend to contact sellers, and then the earnest money deposits you put in if those, if you don't get those returned because it takes you too long. But if you're a fix and flipper, you can lose a ton of money if you get your numbers wrong and you have to sell it at a loss. You have to keep paying for it. And you're like in a position in which you have hard money loans, you're paying interest, and your debt is increasing. The property value is only typically decreasing. You overpriced it or something. You can end up losing a lot of money where your losses as a wholesaler is insulated. So if you want a clear decision, if you're making $100,000 or more, that is an easy rule of thumb to say, maybe you should focus on passive income. You could still focus on trying to develop more active income. I just think there's better ways to do that once you have your financial needs met. And for the majority of countries, or the majority of people in our country, in the United States of America, are making $75,000 or less. Like, the median is making half that is making less. And a lot of people want to talk to plenty of people that want to make $20,000, $50,000, $100,000 months. That is awesome, right? That's awesome. And if you're already making over $100,000, you're in the top 18% of income brackets. Like, you as an individual are already in the top 1/5 or 1/5 of our country making that amount of salary, right? So understand have some perspective on all this stuff. Understand that I built my $22 million portfolio without ever making over $100,000 in a year, except for 1 year through my job, right? But I leveraged the security of my job and having my financial needs met through my job, paying for all my expenses to build my real estate portfolio, and then taking that cash flow from my real estate, which I did not need to live off of, to reinvest back into the business. As I was leveling up and skilling up and adding more properties, I was then taking some of the excess cash flow. I still had some sitting there. You don't want to get too close and use it all, but you reinvest it back to then free up your time so that you can focus on better use of your time, activities to help you get more deals and more money so you can build your portfolio more and more. And then when you quit your job, like when I did, it wasn't even a question. I was making twice as much in my real estate at that point than I was in my job, right? So it was like not even a question. I stayed longer than I should have due to mindset issues and whatever. But once push came to shove and they asked me to come back in office more months after having my baby girl, my first child, the reason why I've been working so hard and tirelessly for the, the entirety of my life up until that point, it was the best FU money I could have ever asked for. I was in a position to say, no, I'm not going to do this. First of all, I didn't agree with it for myself or my staff. Second of all, felt really disrespectful. I just had a brand new baby. I've been remote. Now they want me to come back in office more. Not going to happen. Thank God I did the right things early on, saved, invested, developed my skills, and scaled a lot of passive income that I no longer had to be forced to do that job, which was great. So I moved on from it. So as a quick recap, if you make less than $100,000 a year, there's the obvious case for maybe you should be focused on active income because you could potentially make more in real estate than you can in your current job. Or if you just have a ton of time and less responsibilities, you can keep your job and then do it. You can like moonlight your real estate business, or you can, that's kind of the rule of thumb that I'm just giving you generically and putting things into perspective based on personal financial stats for our country as a whole. If you're making over $100,000, it doesn't mean that you shouldn't do active income, but you might consider it a better use of your time to focus on developing your portfolio that generates you passive income, not touching that and reinvesting it back into your business and scaling. Okay. So if I was focused on active income, these are the 4 key areas that I think of. I'm certain there are more, but this is what I think of. I think the one that is talked about the most is wholesaling. And for anyone who does not understand what wholesaling is, very simply, you are talking with, let's just say sellers. You're talking with sellers, getting their property under contract, and then selling that to an end buyer. Okay? So you're putting this property under contract as an investment for someone else to buy. Whoever buys it pays you a fee for putting that deal together. That's what wholesaling is. We could get into the nuances, and I'm not going to during this, but like cash wholesaling versus creative wholesaling. If you are wholesaling and you want the largest assignment fees, I recommend focusing on cash deals because there's a lot more equity to play with in the markets that you're operating in. I would focus on more expensive properties with bigger spreads because like the wholesaler gets paid pretty in line with how much profit the end buyer will make. Okay. And you will make more upfront income as a fix and flipper in theory if you know what you're doing. Because if you have a property that's worth 500,000 and you can sell it for $1 million, right? There's more spread. There's $500,000 of spread. You're going to still have to do renovations and there's carrying costs and loan costs and the wholesaler assignment fee, but there's more to play with there. But if you're doing lower cost, $100,000 homes, maybe you can have a more volume. You could do more deals. But if you're getting under contract for 50,000 and the end buyer can sell it for 100,000, well, with the renovations and this and that, like there's just not as much room for you to make as much money. So my advice to to wholesalers, I think cash makes the most sense. Selling deals to fix and flippers makes the most sense, as well as focusing on larger dollar properties, things that are worth more, especially if you can get bigger spreads on those deals. That's how you can maximize your assignment fees. To be clear, I'm not saying it's easier. That's not the case. It's actually more often than not harder, right? However, it really depends on not just doing as many deals as possible. Depends on maximizing your actual assignment fee or your active income from that. It's kind of the same thing with buy and hold real estate. It's not about owning the most number of houses. It's about making as much money as you can in total, honestly, with the least amount of houses. All right. So that's wholesaling. Wholesaling is overly simplified so that people can sell you stuff. The best wholesalers, that sounds so messed up because everyone's selling information, education. And if they can help you streamline your investing journey, it's worth it. I paid for lots of education, and more often than not, it's worth it as long as you take action. But with that caveat, wholesaling is one of those things that seems like it's accessible to everyone and anyone can do it. You can do it from anywhere and this and that. And it's true, you can, but understand that because it's accessible, it's also competitive, right? And those that are competing with better data better teams and systems and follow up and more experience and more time and all that, they have a competitive advantage over you. Doesn't mean it's going to be impossible. Just understand it's a business and you're competing with other businesses. And when that's the case, the business that knows what they're doing and has more time and all that tends to do better. All right. I'll leave it at that. That is wholesaling. I think wholesaling makes sense, especially if you have lower income. I'm talking $50,000, $60,000 or less. Understanding, like, I want people to understand, I'm not like an idiot when it comes to understanding like income brackets. And that's why I put into perspective what is like the minimum wage. I don't know. I'm in California, so I don't know, but it's like 15, 20 bucks, 20 bucks, we'll say. I don't know. It's probably above 20 bucks, which translates to $40,000 a year, right? That's really kind of the minimum. People make $30 an hour, 60,000 a year, roughly, right? You just take the hourly rate, multiply it by 2, add a couple zeros, right? That's kind of how you get the annual salary. People go and get a bachelor's degree and a master's degree sometimes and end up with that much income, right? And some people do blue collar work or whatever you do, and you can make more than that, right? Even the military, as an officer, I made more than that. I made more than that as an officer. With that being said, if you're making that $50,000, $60,000 a year, you can make the case that wholesaling should be something you go into. I still don't think you should go all in and stop your active income until you're really successful at it, because it takes time, money, and energy to get the flywheel of wholesaling operational before you actually start bringing in income and doing it consistently. And there's a lot of highs and lows. And depending on if you have a very lean lifestyle, you don't spend a lot of money, you don't have a lot of time commitments, maybe you don't have a lot of people like dependent on your income source, that's a very clear sign sometimes that wholesaling might make sense for you. Or you have lower income, you can replicate that more easily through wholesaling. That is when that could make sense for you. I weirdly enough did it in my investing journey because I didn't think that I could scale through buying and holding, even though I started buying and holding, but I was house hacking. I had to wait 1 year between each property. So then I started wholesaling as another way to do more real estate. Well, thankfully I got out of it because it didn't align with my long-term goals. I did plenty of deals and it was nice, right? There's benefits to it. I did a little bit differently and I'll talk about that. But if you're making lower income, you can make the case that even casually wholesaling, maybe one deal a month, one every 2 months, you can easily still replicate your salary, especially if you're doing the acquisitions, disposition, you're doing a lot of it yourself, doing a couple $10,000 assignments, or sometimes, if you're doing a cash wholesale deal, bigger deal, make $50K, $80K, you can replicate your entire salary through one deal or a few deals, right? That's why that lower income kind of makes sense, but understanding that you may not be successful at that same time. All right. The next active income a lot of people talk about, they kind of think of it as an elevation of like elementary school or beginner is wholesaling. I don't actually agree with that. But then they say, then fix and flipping. So you get your $10,000 assignments, you save enough to have, you're going to get a hard money loan. You're going to get a loan to buy a fix and flip property. You're going to need to put some down payment, 10% down. Usually they'll fund, depending on how skilled you are, right? I get better terms as a fix and flipper than someone newer because I'm more proven, right? I've worked with them longer, lenders, but they'll want you to put 10% down payment on the property value, and then they'll cover the renovations and 90% of the property. You still have to put in that 10%. Cool. So you take a couple wholesale assignment fees, stack them together, buy a fix and flip. So now instead of making 10K, you can be the one to make 30 or 50K, right? On that deal. So you're making more active income per deal. Once again, there's more risk involved with that, right? You could end up not making that money. Prices adjust, or renovations cost you more, or it takes you a few months longer. Very quickly, the profit you thought you had is gone, right? Or even now you're negative, and now what are you going to do, right? So there's ways to get out of that, but it's not as obvious when you're just starting out. But that's kind of the next thing. You buy a property, whether it's from a wholesaler, you just buy a property that's in some level of distress or under market value, you renovate it, and then you sell it to someone else, typically an end buyer, someone who's going to live in it. They tend to pay the most over like an investor or whatever. So there's those two routes. I'm not going to get too far into fixing and flipping. I think that's enough there. People think a lot of times the progression is you either start with wholesaling, then promote to fix and flipping, or you just start with fix and flipping, and you have to do all that before you start buying and holding. Well, I'm proof you don't. And lots of people don't do any of that and then just go straight to buy and hold investing. whatever. All right. So that's 2 active income sources. Understanding wholesaling is in theory more accessible. There's lower risk besides the money you put in to start your business. And in reality, you can more, there's more risk. There's less risk, but it could take longer for you to start generating income. And there's like typically less profit per deal than you would as a fix and flipper. You can have a better time succeeding as a fix and flipper doing that part time in conjunction with your job than you would like wholesaling. You can still wholesale part time, but understand it's just more challenging than those that go all in on it, have the better system, tools, and resources. But those are those 2 strategies. What I prefer more so, because I've always known I was a buy and hold investor, because I always cared about how can I get money coming in every month without me having to exchange time for that directly, right? Like I said, there's no such thing as passive income in the sense that you always have to, I mean, unless you were born with a bunch of money, right? There you go. Then take that, put it into 4 or 5% bonds or the stock market or whatever, and there you go, you're good. But I'm talking to the majority of us who that's not the case, myself included, was not the case. So when it comes to buying and holding real estate, right, which is passive income, you still have to initially find those deals. Typically, you're gonna have to fund those deals yourself. Or even if you're raising money, you may not be able to raise all of it initially as you're developing your skill set. But you have to work to make the money to be able to invest. Then you have to work to get the deal, get it operationalized, scale your portfolio until you can start bringing in people like I've done to free up a lot of my time in my real estate business. That's the goal. And that's what my mentors taught me. And that's the path I'm on. I'm not nearly as time free as they are, but I'm working towards it. But there is always time invested at minimum to make the money to be able to invest. Even if you're a lender, which is semi-passive, passive, whatever you want to call it, you still have to make the money, even if you're not the one actually doing the real estate part of the business. Even the stock market, all that stuff. You have to make the money to then be able to invest in these passive, semi-passive, semi-active income streams. So when it goes back to active income, I knew I wanted to be a buy and hold investor. So what I did, even though I started with buying and holding, is when I was wholesaling, I was doing something more so like bird dogging. I was talking to end buyers, doing strategies that I wanted to do at that time, which I thought the best strategy to put little to no money in, if I was going to go as an investor, was the BRRRR model. You buy a property, you renovate it, you rent it out, you refinance it, and then you pull your money out, right? With the refinance, you long-term debt in place, pull your money out. Sometimes you get all your money out. Sometimes you get more than you put in out. Sometimes you get less and you have to leave money in the deal. But the idea is you can pull some, if not all of your money out, and then repeat that, like recycle that capital for new investments. So what I did was I bird dogged. I went to markets that I was interested in, and then I found buyers doing that strategy. And then what I did was then I started wholesaling, right? So I knew the buyers and what they wanted. Then I started talking to sellers directly and structuring investment opportunities that I knew my buyers wanted. So I was still wholesaling, right, and getting active income from that. But the main reason why I did it was because I knew I wanted to do what the buyers were doing. I just wasn't comfortable with implementing that strategy yet because I have not done it yet. I wasn't comfortable investing out of state yet, handling those types of renovations and understanding the loans and all that stuff. So what I did was I found buyers, provided them value by bringing them the deals they wanted in exchange for money up front, active income, even though it was less than I would have made. It was a little bit less. If you're bird dogging, you tend to make a little bit less than a wholesaler would. I was able to make more because I was the wholesaler myself. Sometimes you bird dog and you're not the wholesaler. You're just finding deals from wholesalers, from agents that an end buyer wants. You tend to make less income from that. But if you're doing it right, you're bird dogging for the person that you want to be in the near future. And not only are you making money through this, you're learning how to find these deals. You're learning how they own it, like how they acquire them and operate them. And you're taking advantage of this learning opportunity, which is way more beneficial, honestly, than just the money itself. The money's good, especially if you absolutely need it. But if your goal is to do what they're doing, that's the best form of education that you actually get paid to do, right? Awesome. You don't have to go to the extreme that I did, which was also wholesaling. You can just do it by finding other people's deals and matching it with the right end buyer, right? Bird dogging. But it's imperative if you're going to do that, understand you're probably going to make less money per deal. However, if you find the right buyers that you want to emulate and do what they do, you could have the case there for that. That makes a lot of sense. And for me, in hindsight, that was the best thing. right? Even if I did not do the direct acquisitions, do the wholesaling, the benefit of learning from other people who were doing the thing that I wanted to do was far more beneficial because I was learning the process from them, learning what deals they liked, or if they wanted to renegotiate them, why do they want to renegotiate them? Why does that deal not make sense for them? Why was I off in my analysis that was different than theirs? Who are the people they're working with? How long did it take them to sell this thing? Because then I was trying to do more deals with those same people, right? And I'm looking for people who are repeatedly doing deals because I want to emulate that. And that's why it made more sense. That's why I think that makes more sense in hindsight. Wholesaling I could have foregone completely and just found those deals for end buyers that other people are putting under contract, right? I would have rather done that, but the principle holds because I kind of did both. It's a little more work, but the back end was more important for me. I recommend that to a lot of people. I wouldn't quit your job today for that yet until you're consistently doing a couple of deals a month. Even if you did, let's say on average, you make on the high end, right? 5K as a bird dog per deal. You can make more if you're doing it as for fix and flippers, but I was doing it for buy and hold investors. So there's only so much they can pay you per deal. But to me, the exchange of learning from the buy and hold investor, which is what I wanted to do, is more beneficial than making a little bit more money as a bird dog for fix and flippers. Because I knew I didn't want to do that. That wasn't going to be the thing that I wanted to do. I wanted the passive income. So understand that you're going to make a little bit less. However, if you, let's say you do 5K per deal, you do one deal a month for 12 months, for a year. One deal a month, whether it's the same buyer or a couple buyers, 5K, that's $60,000 of income. You see where I'm saying this $50,000, $60,000 of active income, how you can replicate that fairly easily. And the difference with bird dogging is there's no cost associated with it. There's your time, just like everything else. There's your time, right? Your hustle. That's what's going to get you paid. However, you're not spending money pulling those grabbing those lists, talking. You're not doing all that stuff. You're working with buyers and then finding them the deals, and you can replicate that. Then let's say you do 2 a month, right? That's $120,000 a year. That's awesome, right? Like, see why that makes sense, kind of why I say the numbers that I do for active versus passive. But if you can just skip that and be the buyer and you're already making 100,000 plus in your job, just skip all that. That's a lot of extra work that you may not need to do. But if you need the active income or you really need to develop the skills, that's a great avenue for someone, right? But just make sure the person you're bird dogging for actually provides you that value that you're looking for. Otherwise, once again, if your goal is just to maximize income from that and you don't care about the education and doing what they're doing, then maybe be a wholesaler or bird dog for fix and flip investors, right? You'll get more per deal in theory because the same reason why cash wholesalers tend to make more on average than a buy and hold wholesale, like someone who's catering to the buy and hold market will make less, is there's just bigger spread between what you can pay someone for a buy and hold investment for the deal to still make sense. Whereas for a cash deal based on equity, you can get much bigger discounts and then be able to make more. So if your goal is solely more money, whether you're wholesaling or bird dogging, it makes more sense to do that with fix and flippers. For me, it never made sense because I wanted to be a buy and hold investor. I wanted to improve my skills as a buy and hold investor and implement a new strategy that I wasn't doing in a new market and understand and learn from them. So I took the haircut so that I could then learn how to do that thing from buy and hold investors that I emulated. So I hope that provides a lot of context there. The other one, which I'm always very iffy about, I'm always very iffy about advertising this or articulating that people should do it. But it's something called capital connecting. You connect with those end buyers that you feel very confident in them operating, but maybe they're using their own money or they're just not very good at marketing themselves or raising money for their deals. So then what you do is you get very clear on who they are, what they're doing, what their track record is, right? First and foremost, how they performed previously. And then what you do is you vet the deals, be pretty knowledgeable analysis to vet the deal that they're asking to raise money on, make sure it makes sense. And then they should be the ones putting together the marketing material for the capital raising. You might have to, it just depends on who you're working with. Like the capital connectors I work with, they get everything spoon fed to them, right? Here's who I am. Here's my experience. Here's the deal that we're raising money for. Here's why we like it. Here's the risks. Here's how much we're looking for. Here's where the money's going to. Here's the presentation. Couldn't be any easier for them, right? To then take that and connect with people that they know in their circle through their networking connections, whether maybe sometimes family or friends or coworkers, however they get that capital raised, they raise that money for that deal and they get paid a fee up front for that. In theory, there's like rules about you can't get paid a percentage fee. Like if you raise $100,000, you can't get paid 3%. Like I get, 3%, $3,000 of the $100,000 that I raise, right? But just you can put a flat fee and provide some additional services, some consultation services, and help connect the dots and get paid in that route. That's not the point of this video. The point of this training is for you to focus on, here's another avenue for active income, working with end buyers, ideally doing the business the way that you want to do it. You're going to make less than you would have for wholesaling or fix and flipping per deal, but you're also not going to spend any money, right? So once you look at the net, you'll realize, I talked to plenty of people who have just, after 6-12 months, all they've done is lost money, time, and energy trying to wholesale. Definitely lost money, fix and flips gone wrong. Well, that's impossible with bird dogging and capital connecting. All you can do in those scenarios is waste your time, primarily if you're working with the wrong end buyers. That's usually when you waste your most time, or you're shitty at what you're doing and you don't understand how to analyze deals well, and you're bringing your end buyer deals that don't make sense, like the numbers don't make sense and are not in alignment with what they're looking for. So you're just wasting your own time in that scenario. Or you could be wasting your own time by not working with proven buyers who have needs for the deals and the money that you're trying to provide them, and then they're not following through, right? They're not doing their piece. Well, cool, move on to the next one. That's easy. But if you don't have the skills to analyze and understand what's a good deal, well, it's going to be really hard for then, A, to bring good deals to your end buyers that you know you're going to get paid for, or B, raise money for good deals. And that's where I get really hesitant about recommending capital connecting, because in my opinion, in that scenario as a capital connector, I don't give a crap about the borrower or the end buyer. Honestly, they're going to be the one to pay you. I want to learn from them. But in this scenario of all the people I care about, I don't care about the end buyer relative to the lender. I care way more about the lender and ensuring that their money is as safe as possible. And I'm bringing them, if I'm connecting them to someone, I am doing my own due diligence to make sure that that operator, the borrower, has a solid track record and that the deal makes sense. At the end of the day, it's still up to the lender to do their own vetting and to make sure that operator is in alignment with them. They have the experience that they want. The deal makes sense. They understand the risks and the rewards of this deal. However, if you're connecting money to those deals and you're like a middleman between this stuff, you got to make the information very accessible. And in my opinion, you shouldn't try to raise money for people that are not doing things well, right? They're not doing it at a high enough level, or they're not doing it well, right? I think that's setting most people up for failure. Does it mean every single person who is less experienced or has had a few hiccups should not be able to raise money? No, that's not what I'm saying. But what I'm saying is you want to minimize the risk for your lender and having better operators who have done, like I say, operator, buyer synonymously, borrower, it's all the same thing here, right? Buyer, operator, buyer, buyer, operator, borrower, same thing, same term here. I would make sure that you feel very comfortable with their track record and their deals make sense before you raise money on those. The first thing I would do if you're a bird dog is analyze the deal and make sure it makes sense for your buyer. First thing I would do if you're a capital connector is make sure the deal you're raising money for makes sense, and then raise the money for those deals. You can get paid a fee on that as well. And the big advantage is you might make less per deal, but you're also not spending. You might make less gross revenue. Like the wholesaler will make $10,000 assignment, but then you got to pay your dispo and you have to pay your marketing costs and all this stuff, right? What you're left over with could be significantly less than $5,000 at the end of the day. Well, with a bird dog or capital connector, you're making that money and there's no expenses, right? Your time is lost in either scenario, but like that, the time goes. That's where you're exchanging your hustle, your time for that active income. But you're not, like, there's no like expenses to pay after that. Maybe you get like a $50 to $100 a month CRM, whatever. That's the cheap part, right? That's not the end of the world. If you want to keep track of things at a high level, if you're just starting out, you can do all that on a spreadsheet. I might just create one for you guys for free for those who hop into my free Wealth Through Real Estate school community. I'll just create one of those so you can keep track of this stuff more easily, drop it in the comments. Comment now on here, on Instagram, on YouTube, and comment comment on the YouTube video if it comes out and you're watching this after, if you want me to create something like that for you. Some way to keep track of and organize your buyers if you're bird dogging for deals, or your buyer/borrowers if you're capital connecting, as well as the people who have proposed, who have said that they would be willing to lend to you. I do all my stuff on a CRM. It's more automated, more scalable, but it took time to get to that point where it even became a necessity. It's almost more work than it's worth on a CRM when you're just starting out. You can get to that point, you scale to that point later. I can drop that in there if someone wants that for you, if people ask for that. All right, so why do I prefer, if in theory you would make less revenue as a bird dog or capital connector, why do I recommend that over wholesaling? Well, like I said, you might actually end up with more profit, but more importantly, you're going to end up with the right skills. Because if you are serious about being financially free through real estate, you're not going to active income your way there. You're not going to wholesale, bird dog, whatever. You can't stop there. You have to actually own the assets so you generate the cash flow that makes you financially free and the tax benefits associated with it, so you don't waste money on taxes. I haven't paid taxes in years, all thanks to my real estate portfolio, but also the wealth associated with it, right? The tenants paying down your debts, they're paying down your debts and paying you excess, making you cash flow, making you free. They're paying down your debts, adding to your wealth, adding to your net worth every single month. Your properties are increasing in value. They appreciate in value, adding to your wealth, adding to your net worth by building your equity for you. That only happens through owning assets. You can do that if you already have money as a private money partner. You just find people you want to work with and then you lend them the money. You guys partner on the deal. So you're not actually lending in that scenario. You bring the money to buy the property. You get a percentage of ownership and cash flow. So if you have more money but less time, that's the route, right? There's some people, well, actually plenty of people that are in that position. I talked to plenty of them, right? I've raised millions of dollars from people like that. But then there's also the people who want to buy and hold real estate, and you can either use your own money to buy those deals, or in my opinion, raise money to buy those deals. So then why do I like bird dogging and wholesaling? I don't like wholesaling. I don't wholesale anymore. Why do I like bird dogging and capital connecting? Well, the only two skills you need to be able to buy and hold real estate is how can you find great deals? How can you fund those deals? Bird dogging teaches you how to find those deals. And if you're emulating the buyers that you're working for and they're teaching you the things that you want, you want to learn how to buy that strategy, right? People bird dog for me who want to learn how to do CoLiving, the rent by the room model, primarily buying deals, leveraging creative financing, sometimes restructuring those deals and making them even better. So that's why someone would bird dog for me. It's because they want to be able to do that for themselves, right? And maybe they're not comfortable yet doing the deals independently, but at some point they're going to get so much experience and they're going to build this reserves through their active income from bird dogging. They decide, okay, I'm going to be the one to just buy this deal, or B, let me see if I can establish a better relationship with my buyer and I can get some equity in these deals as well, right? Call that wedging yourself in a deal. You're wedging yourself to get equity in a deal. So you're not just getting your fee. You might get the same fee or even a lower fee, but you're actually an owner of that asset with that buyer that you're looking for. Or you say, no, I don't want to do that. I want to be the one to solely own it. I want to be the one to operate it. Okay, cool. You buy that deal. Now you have the skill set of buying the deals, or you have the skill set of finding the deals that you know, proven buyers that you emulated, paid you money for. Cool. Now you buy it and you actually pay less because you don't have a bird dog to pay for that. You did the work. Now you just buy that deal. Okay, well, the next piece, right? The deals, well, the capital. You need to be able to fund these deals. Every single investment has acquisition costs, the cost to acquire the deal, whether it's traditional, creative, it doesn't matter. There's always acquisition costs. People say no money down. That's not true. I bought a $2+ million property, literally $0 to the seller, but it still cost me some money. Okay, it still cost me some money for the closing costs, for the there's we had to go through title and escrow and all that stuff. That costs money. There was a transaction coordinator that costs money. Well, I wanted to renovate and improve the property and then furnish it better. That costs money. In this instance, there was an agent. He got paid less than half of 1%. So that was as pretty much as low as you can get outside of zero. But that $9,000 wasn't making or breaking this deal, right? So the acquisition costs are there, the renovations and furnishing costs are there. And if you're a good buyer, you either have reserves set aside in your bank account, or when you're raising money for a deal, you are raising money for reserves and the carrying costs. So those first couple months when you just buy it and are renovating it and are furnishing it and are listing it, it's slower. Well, those first couple months, you still have to pay your mortgage. You still have to pay your utilities. You still have to pay these costs. You need to make sure you have reserves and carrying costs set aside for that. Otherwise, you're setting yourself up for failure, and you bought this property and now you can't afford to float it until it's operational, making you money. You waste all this time and energy for what? To just lose it now? That's crazy, right? Like, that's crazy when you think about it. But if you don't know this, then you get into that position. You're like, oh, what do I do now? So you need to have acquisitions, renovations, reserves, whatever. You need to have those costs. You need to be able to fund those deals. Well, as a capital connector, what did you learn? You learned what types of deals are people buying? How are they structuring everything? How do they know how much to raise? Where is the money going? Ideally, if you're doing it well, you're also learning throughout the process what went well, what didn't go well for that person that you're working with. You learned their marketing material. How do they, like, what information do they share? How do they present the deal? Especially if it's the same strategy that you want to do. If it's CoLiving and you're leveraging my CoLiving capital raise marketing material, then go raise money. Well, there's nothing, I can't legally stop you, and I wouldn't even try. I want you to succeed. I couldn't stop you from leveraging that, messing around with it a little bit to customize it for yourself, and then raise money for your deals in the future. Like, you already have all this stuff and the knowledge, and now you've already worked with lenders. So either A, you find those deals and you end up being the one to buy it, whether you work with a bird dog, you find your own deals, or you just partner with someone who's got the deal. You bring the money through your capital partners and you buy those deals. So why bird dogging and capital connecting? If the only two things you really need to buy and hold real estate, not to make money and build wealth, this is separate, but to just buy and hold an asset, is the good deals. I'd say great deals, right? The better the deal, the better, right? Obviously. But then the money to fund those deals. Well, bird dogging teaches you how to find those great deals that you know buyers want, that you're emulating. Capital connecting teaches you how to raise the money for those deals that you want to be buying as well. And you're learning throughout this entire process. So those two skills then make you a better buy and hold investor when you choose to be the buyer at the end of the day. Whether you do bird dogging, capital connecting, or both, or you partner with someone who's got deals, or you partner with someone who's raising the money, whatever that scenario is, you've got the right skills to then buy and hold that asset. The downside there is I've seen over and over and over again how many people think that's where it ends. Well, it's not. That's actually the start of your buy and hold. Well, that's not true. That's not the start, but that is the start of your passive income. You need to have that asset to then generate that cash flow, tax benefits, and the wealth benefits of debt pay down and appreciation. You need to have that. You need to own the asset to be able to do so. But if you aren't successfully owning and operating your property, if you're not successfully managing the project, the renovations, the furnishings, the listings, getting them managed properly so you're actually bringing in the income that you thought you were, at least bringing in some income in a timely fashion, well, owning the asset temporarily does nothing for you unless you can keep your property sustaining and cash flow positive. Otherwise, you're going to have to put in money every month to float your investments, which then is not making financially free, is because it's not cash flowing, it's not generating you profits. And then if you lose your property because you can no longer continue to float that investment, well, you've lost all the wealth benefits that you once thought you had. Hopefully that makes a lot of sense. The money and the deals are a necessity to be able to buy and hold the deal. Most people get it wrong, is maybe they have the rapport, the charisma, the whatever to find deals or raise money, but they tend to not be buying the right deals, or they so focus on scaling, they don't do a good enough job on the operations. So then they actually don't generate cash flow. They might actually be losing money. And then if you cannot afford to float your mortgages, your debts, you're going to lose your asset and you get none of that wealth benefit. So you did all that for what, really? I want you to really think about that. That's why I focus on, like, my triangle of things you need to understand to be a successful buy and hold real estate investor. The core of what I teach my super investors is find great deals, analyze them effectively, structure them to make them even better, and then use high leverage. You don't need to be the one to go directly to agents and sellers to find those deals. Get consistent deal flow in the types of deals that you want and have other people work on your behalf. Once again, bird dogs as a win-win exchange, or wholesalers, right? Acquire the deal, right? The deal. Then the money. Okay, well, once again, analysis is a must to make sure the deal makes sense. Then analysis for, okay, well, can you use a private money lender or a private money partner, or does it not work for any of those? Well, if you're going to go with one of those, what does the structure look like? What do you end up with as the person raising the money? Or what are you offering to your capital partners? Okay, well, you take that information, you got to have your documentation, your presentation for them to put in front of your capital partners, the people who are going to lend you money or co-own with you, so that they clearly understand what the deal is, what their returns are, what the risks are, what the upside is, and as easily as possible so they can make a yes or no decision. You confuse them, the majority of people, no matter how much they like you, won't invest with you. And capital raising, number one thing typically is the person has to know, like, and trust you, right? First and foremost, it doesn't matter how great your deal is. If they don't know, like, or trust you, the majority of people outside of very inexperienced lenders will not invest with you. So that's like the first thing, the necessity for capital raising. But then it's the deal. The deal has to make sense, but it's not just the deal has to make sense to you, to me in my head as an engineer. It has to make sense to them very directly, what the deal is, why you're moving forward with it, what are the risks, how have you mitigated those risks, and then what are their specific returns in this scenario? How are you acquiring it? How are you going to operate it? What's the exit look like? They need to understand that to feel confident to invest with you. Okay? So deals, money. Develop that, in my opinion. If you're focused on active income, you're making maybe lower income, or that's your entry into real estate investing, that's fine. You don't have to go straight into buy and hold investing. You do not have to. If that's the case, understand the pros and cons of wholesaling or flipping versus bird dogging and capital connecting. And then the benefits, if your goal is to buy and hold real estate yourself, not only are you making money through all this stuff, but you are also developing the right skills to do that stuff. But then the big differentiator is not just the deals or money. You got to own and operate your assets well. You got to understand how to do the proper due diligence when you have a property under contract to make sure all the agreements are right. You're inspecting the property effectively. If you're anything like me, you leverage that inspection and get way better terms during that process. So you get it at a lower price, or you get the seller to renovate things for you, or you know, if possible, if it's seller financing, or that you can adjust the interest rate down, get you more cash flow, better returns, whatever that looks like. You don't understand how to do all that, then close on it successfully, and then manage the project successfully so that you renovate, furnish it, then manage it successfully, and then have your investor relations successful so you can pay your capital partners on the deals that you're raising money for. And then you need to know how to grow and scale your business successfully for who are the key hires that I should make. When? Who are they? When should I do it? What role will they play? When does it make sense to offload certain aspects of my business to someone else that I can hire and train to do this thing, so that I can free up my time to then focus on higher use, more money, more deals, close more properties, have them successfully operate it once you train them well. And then there's like tax stuff, and there's like, you need to have the right professionals on your team. All these things. That's really what Super Investors is for those buy and hold investors looking to scale their portfolio and have this roadmap, this blueprint for them. If you are someone who has at least $20,000 in reserves right now, the more you have, the easier the journey is going to be for you. If you have some experience in real estate investing already, even if it's traditional financing, house hacking, you accidentally became a landlord because you had a house and you moved out and you rented out, whatever, you have some experience, some reserves, and your active income needs are met, then let's talk about if Super Investors is the right fit for you. Just DM me on Instagram at MichaelMNAT. I'm going to drop it in here. It's in the bottom of the video usually. But for the majority of people, I don't think that makes sense for you right now. I don't know that's not true. Well, yes, I know that for a fact because 50% of our country their household makes less than $75,000 a year. So a lot of people are making that 20 to, well, what's the lower end? Like 35,000 to $60,000 a year. So maybe it makes sense to focus on your active income. Well, unlike the majority of people, what I do is I do all these free trainings for you guys. I try to give you as much as possible to help you guys out so you can develop your active income, get your roadmap going, develop the right skill sets, have the right tools and resources that I wish I had when I started first learning about real estate investing 7 years ago. So I always knew I wanted to be financially free. I had no idea how I was going to do it. I had raised in a single family household. My mom worked multiple jobs just to barely make ends meet. I'm a family person. I did not want to have kids if I do not have the time and energy to actually spend and enjoy with them. So my drive for wanting to be a family person, a family man, be great husband, great and present husband and father was a big driver for me. And I knew I wanted to be financially free. Ideally have my finances really in order before I ever even considered starting a family. So that was my driver. And I knew that was what I wanted to do. 7 years ago, I realized real estate, not stocks, was going to be my path to do that much quicker. I just didn't know what I was doing then. I was just learning through books and podcasts and Bigger Pockets and whatever. And I learned enough. By 5 years ago, I bought my first deal after years of free education and paying for books and podcasts and between hundreds, if not close to 1,000 hours of deal analysis, hundreds of deals analyzed, creating a buy box, going to local meetups and all that. I finally had the confidence. That's not even true. Full transparency, I didn't even have the confidence before I bought my first deal. I gave myself an ultimatum. And a lot of you guys know my full journey. I gave myself an ultimatum that said, if you want to be an actual real estate investor that's financially free, you can't just stop at analysis. The people that own the properties, the next step that they take is they make an offer. I know, earth-shattering, of course. But it's funny because a lot of real estate investors I talk to are stuck in the same thing. They're learning, but they're not taking action. Or they're taking the next step, which is maybe analysis. Maybe they're talking to people, but what they're not doing is actually making offers on deals that make sense for them once analysis is good. That is why the term paralysis by analysis exists. People, the majority of people are stuck in that phase, and I was too. I forced myself out of it because my goal was financial freedom through real estate. Was not going to happen. You don't get financially free through real estate without generating passive income. You don't generate passive income through real estate without getting cash flow. You don't get cash flow unless you're owning properties, which means closing on them, which means making offers on them, which means analyzing them, right? And then having a clear buy box and strategy for how you're going to get there, right? Well, I was stuck at like step 2. I wasn't going all the way through the journey. Most people are stuck there. I thought I had to know everything. In reality, even though I did know a lot because I was doing a lot before that first deal, well, as soon as I walked into the first property we put under contract, great deal on paper, walk in and there's this giant paint bubble full of water because there's a leak in the property during the inspection. I wasn't prepared for that, but whatever. I figured out I would learn and I would figure it out and I would do it. And we did. And I took that, we got it fixed. We negotiated with the seller. In this instance, it was a foreclosure. So it was through the bank. They ended up giving me closing cost credits for that stuff, whatever. But the thing is, you can never be fully prepared. The idea is you can fast track your success in your journey by paying for the right mentorship, the right education, or just learning from people that are steps ahead of you, which is why I provide so much of this stuff for free to people. 7 years ago before I started, 5 years ago when I was working on my first deal and stuck, right? And then as I was scaling my portfolio to 3 years ago, where I was stuck in this portfolio of properties that I built, but I was not enjoying the process and I was not able to scale the way that I wanted to. I was doing roles in the business that made no sense for me anymore. That was roughly 3 years ago. And then that's when I learned a lot of things and scaled what I was doing. That's how I went from $2 million portfolio to over $22 million in just a few years. And that's what really Super Investors is for, right? Let me help you scale your portfolio, but then everything else I give away for free. Let me help you get started. Let me help you analyze deals. Let me help you have all the tools and resources and all these things that I wish I had when I started, then I had to build for myself because I thought the products out there kind of sucked or they were too hard to use. And that's what I try to provide you guys. Whether it's through my free Wealth Through Real Estate school community with over 1,400 members. I don't even market the thing outside of talking about it like this or people tell each other about it. I have that here. I'm just dropping the link for you guys if you want to get in there. There are free courses, free tools and resources to help you get started. I think a lot of people that are on my YouTube probably watch that anyway. And then things like this, gems like videos like this go in there to help people get a lot of clarity as well on their investing journey. So with that, if you are starting your journey, hopefully this provides you a lot of clarity in real estate investing when I believe it makes sense to focus on active income versus passive income. Some rules of thumb. I'm not the guy that says just make decisions based off rules of thumb, like make $100,000 or less or $100,000 or more, then maybe be a buy and hold investor, focus on passive income. Make less than 60,000, then maybe it makes sense to really focus on the active income because you can more straightforward replace that. Like those are rules of thumb. People love that stuff. People love the 1% rule and this and that, but that's not really how it works. There's a lot that goes into it. But I hopefully, as an experienced investor, that provides you guys a lot of my take that can help you out in your journey, making that decision, and then choosing wholesaling, flipping, bird dogging, capital connecting. Why? The trade-offs, the pros and the cons, or just skipping a lot of that and just going to be a buy and hold investor. For me, was through house hacking, leveraging traditional loans, my VA loan, FHA loan. Going that route was how I started. And then I started scaling, leveraging my super investor blueprint, right? Leverage is the key of scaling a portfolio to over $20+ million in less than 5 years. The majority of that happening in less than 3 years. Simply raising money to buy your deals, leveraging creative deal acquisition strategies, not just creative financing, but also creatively getting deal flow, and then also maximizing your rental income. For me, it's through the rent by the room model, right? So with all that, I appreciate you guys. Hopefully you have a great rest of your week, and I'll see you guys next week for live office hours. I'm considering shifting the time on these. If you come live, I'll put it in school, my free school community, Wealth to Real Estate, for the new time. But I don't really want to do it during my lunchtime anymore. I tend to walk with my family. I do it for other people to make it easier. If you're on the West Coast Pacific Standard Time, so that you can attend, but like you can watch the recordings. And I enjoy my lunch. Well, I enjoy my workout, showering, eating lunch, and then walking with my family. This 2-hour window, but instead I'm doing this in the middle of it. I don't want to do that very much anymore. So I'll be shifting the time. With all that, whatever, that's meaningless to you guys. Take advantage of all the free stuff I provide you guys. People charge tens of thousands of dollars for the same things I provide for free because I want you to win. I want you to succeed, but you have to do the work. I can give you everything. You have to be the one to do the work. So with that, later, y'all.
All my young